All right. What's going on? My name is Irek Pikarski with Trading Masterclass, and this is going to be one of those epic trading presentations that's going to give you some solid value. I'm going to be covering one major thesis of mine, which is this: why most traders burn out and how the top 1% trade less, scale faster, and live better. Now, this is going to hit some hot topics, some pain points, and it might cause some fights out there in the trading space because I've been doing this for a long time, since 2012, full time since 2014, and I've mentored many solid 6-figure, 7-figure traders over the last few years. And over the last few years, I focused heavily on one thing: scaling big, and being a black sheep, doing the total opposite of the normal narrative. So what am I talking about? Let's go to point one. We know that most people want to make a lot of money in trading, but most people struggle with it. Why? Well, it brings me to one point. Point one, the hidden cost of more. And that affected me as well. And I know it affects almost everybody, not just in the trading space, but everywhere. More trades, more hustle, more screen time. So most traders fall for that trap. More trades, more hustle, more screen time. They believe that makes them more money, but more trades doesn't equal more profit. It leads to burnout, chaos, and decision fatigue. Now, why do we think that more is more? It leads to my first flaw in the system, the 1% rule. Risking less than 1% per trade sounds safe, but it keeps you in a hamster wheel. You end up chasing setups, overtrading, and stuck in emotional cycles. Most never scale because their system can't handle pressure. They're managing chaos. So, it's a big deal there. Now, realize that this is serious, right? And the 1% rule, I agree with it to a degree. For a beginner, for somebody who's totally fresh on the charts, doesn't know what a trend line is, what a candlestick is, how to position size, and how to even execute or work with their broker. Yes, you don't have a system, you should be probably risking not a lot of money, 1% or less, right? But this video is not for beginners. This specific video is for, in my opinion, full-time traders, 6-figure traders, people who are in this. They're not just doubling around. It's not a hobby, right? This is serious for you. You want to do this full-time. Maybe you're doing this full-time and you want to make a shit ton of money. You want to live a good life, right? So like I was saying, this is not for beginners. This is for those people who are not beginners. They know beginner concepts, all right? That's for you. So when I'm talking to that person, when I'm talking to you who's not a beginner, the 1% rule is false. It's good for beginners, not good for scaling. Let me explain, right? I know that everybody here watching this video wants to make a lot of money, struggles because of overtrading. More trades, more hustle, more screen time. The 1% rule makes you emotional, keeps you emotional, but also more trades equals more room for error, right? So what do you really want? What the fuck do you want? Seriously, right? What do you want? And there's only one thing that people want in the trading space, everywhere, really. What do you want? Let me ask you this first. What do you want? I have this interesting exercise that I've picked up from one mentor of mine. It was like, take out a piece of paper and write down 10 goals. Write down 10 goals. What do you want? What do you want? What do you want? Write it down. 10 things. Maybe some financial things, maybe some relationship things, maybe some items, maybe some memories that you want to make. Right? What do you want? Figure it out. Write it down, right? And then look at that list. Look at that list of 10 and ask yourself this question. Which one item, if completed, everything else gets accomplished? You know what I'm saying? Which one item on this list of what I want, if accomplished, everything else comes true? Okay, and that brings me to money. Okay, in a trading space, it's typically account size, $1 million account size, $10 million account size, maybe 100K. You know, that if I have a $100,000 account, all this stuff comes true. Or if I have $1 million account, all this stuff comes true. Or if I have a $10 million account, all this stuff comes true. So there becomes one goal, one point of focus, scaling that account to that specific level. Other stuff is noise, right? It's a distraction. There's only one point of focus, scaling, right? And when I'm talking about scaling, right, what do you want? Well, it's more than what people think, right? You're not here to make 20% and retire slowly. Otherwise, you wouldn't be trading. Again, I'm talking to traders. I'm not talking to some beginners who are just doubling in trading, right? I'm talking to traders. You're not here to make 20% and retire slowly. I mean, if you are, like, why are you doing this, man? Like, and if you may taking 200 trades a year or 100 trades a year to make 20%, it's like, what the fuck? You know? You can just invest in the S&P 500, put a little bit of BTC allocation in there to spice up your returns, or use a tiny bit of leverage, you know, in the right moments to boost up your returns, and you'll be hitting that 20% with much less work and effort, right? But that 20% does not get you that goal of, hey, $1 million account, $10 million account. Truly, it doesn't. Maybe when you're 60 or 70, you know? So, what do you want? 1 million, 10 million, 100 million. 1 million is a good base, right? What do I mean by 1 million? 1 million gives you good earning power. It gives you good income, but it's not enough to retire. It doesn't give you freedom. It does not give you financial freedom. I was talking to, a trader recently, and he's like, I have $1 million, but I want to retire in Thailand and I cannot because it's not enough money. Do you see what I'm saying? $1 million is not enough to retire in Thailand. It is for some people, for some. I mean, you want to live well, right? You want to live well. So I'm like, how much do you want? He's like, 20K a month. Yeah, that will eat through your $1 million real quick, real quick. If you don't know how to make money, $1 million is not enough. $1 million gives you a good income, right? So that's typically goal one for a trader, the scale to 1 million, if you're already full-time, and I'm talking to full-time traders here, right? And if you're not full-time, your goal is 100K, right? 10 million gives you freedom. Now, what do I mean by that? 10 million is typically that number where, hey, I don't need to trade. If I want to take 3 months off, it's cool. If I want to take a year off, it's cool. If I want to take 3 years off, it's cool. If I want to take 10 years off, it's cool. I'm going to have money. What do I mean by that? Right? So there's this magic calculation out there. It's not that magic, but it's legit. If you put your money in the S&P 500, let's say you put $10 million in the S&P 500, it generates roughly 10% on average annually, $1 million on that 10 million, right? That first year. The safe withdrawal rate is about 4%. You can withdraw 4% every single year and you'll never go broke. That's based on, the last 100 years of data or so, right? So that if you put your money in the S&P 500 that generates roughly 10% annual return and you withdraw 4% annually, you'll never go broke and your money will continue to grow. Now, 4% annually on 10 million is 400 grand, that will keep on increasing. And on 400 grand, that pretty much puts you in the 1% of earners, and that's a pretty good fucking lifestyle. And that's freedom. What does that mean? That means you can just invest, pull it out, you don't have to work, right? But that's just one of those goals. 10 million gives you freedom, that type of freedom, which is gorgeous. It's beautiful. It's amazing. But some of you have bigger goals. You realize that if you live in a place like Vancouver, Canada, Miami, Los Angeles, New York, or if you like nice places, nice accommodations, or even if you want to live in Costa Rica, but you want to live in a nice part of Costa Rica, well, those are American prices. All right. And if you know what a nice house looks like, it's fucking $20 million. You know, and if you want a $20 million house, 10 million is not enough. You got to go for 100 million. And some people will be like, well, I want a $20 million house here and a $20 million house there. And maybe a yacht would be nice too. And now all of a sudden, $100 million is not enough. You know what I'm saying? You know what I'm saying? Right? So percentages versus multiples. Most people in this space tell you 1% game. You know, I heard this one story. Let me tell you a story. I heard this one story from one trader in this space, popular trader, you know, funded trader. He trades funded capital, you know, from those prop firms. And he was like, all you need to do is make 2% a month and you're going to live a good life if you have $1 million. So if you have $1 million, and that's $240,000, you know, it's not that much. And if you spend all of that, you're never going to scale, you know, never going to scale. So again, it's playing that same safe game, right? We're talking scaling here, okay? So what do you want? You technically want $1 million account, $10 million for freedom, and $100 million if you have big goals. A lot of people don't. A lot of people don't give a fuck, but they would love freedom. Almost everybody would love financial freedom. You know, depends on where you live. That's probably on average about $10 million invested. You know, where like again, based on that calculation, you can pull it out and never go broke. You know, so the problem, you're struggling to fucking make money because of a flawed framework. Causes you to overtrade, be emotional, and because of more trades, it also gives you room for more error, human error, you know. And what you really want is not percentages game. You're not here to make 20%, 10%. You're here to 10x. You're really here to 10x. And what I'm saying is that 10x is much easier than 2x. 10x is much easier than making 100%. And this is where my mind shifted. I was trading a 1% risk and I made good money trading 1% risk. I moved to Costa Rica, made a few million, you know, and then decided to move back to Vancouver and start a fund and raise capital. And then the pandemic happened, and I'm like, fuck that shit. I don't want to work with people. I don't want to raise capital, you know. I don't want to be responsible to somebody else. I want to be the guy giving capital and investing businesses and so on, you know. So I started to look at how other, not hedge funds, scale capital, but how other firms, there's many funds out there, how other funds scale capital, you know, mainly those private funds. They're set up on their business, proprietary trading funds, not those prop firms, those that sell you challenges, proper prop funds, which is a business trading its own capital. Banks do it, other funds do it, traders set them up, pull capital together and trade their own money, right? Now, when you're talking scaling at a different level, this is what I'm talking about. The math of scaling, right? I started to ask myself a different question. I started to ask myself, you know, how do I make a shit ton of money by not raising capital, you know? Because this 1% game, hey, ain't gonna do it, you know? So then I started digging, I started refining the system, and I'm like, fuck, man, there's this hack here. And it says here, show trades required for growth chart. So let me show you this chart, all right? Show you this chart. I'm gonna screen share here. I got trades on the chart here, but I want to pull up this little window here, make this larger, focus on this for a sec, you know. So I have a little screenshot here of a table, and we have risk per trade 1%, 2%, 3%, 4%, and 5%. All right, risk per trade. And I have the expectancy 0.9R, 1.95R, 4.5R, 4.05R, and that repeats. That's 3 different trading plans. I'm going to show you 3 different trading plans, right? And we have 2 targets in multiples. One is a 2x target, the other one is a 10x target, okay? So what does it take to 2x an account at that risk and that trade expectancy, and what does it take to 10x an account at that risk and that trade expectancy, all right? So 77 trades and 257 trades. So if you're looking at 10x at a 1% risk and a 0.9R trade expectancy, I'm going to explain this in a second. If you're looking to 10x an account, go from 100K to a million, that's about 257 proper trades. But if you're going to increase risk and stay at that same trading plan, you know, that generates roughly 1R trade expectancy, that's about 52 trades. It's a big difference. It's a big difference. And if you refine your execution a little bit more, which is not hard to do, and you move to plan 2, which gives you roughly a 2R trade expectancy, you're looking to 10x your account in about 25 trades at 5% risk. 257, 25. 1% risk, 5% risk. Solid system, better system. All right. Now, when you're looking at that comparison, 257 trades versus 25 trades, okay, you know what I'm talking about, right? When people are trading 1%, this is why I say the 1% game is kind of bullshit. You know, it's good for beginners, yes, understand it. You know, for beginners, for sure, you don't know what you're doing. You shouldn't be risking that much capital, you know. But when you do know what you're doing, when you have a proper system, not some guesswork, not some discretionary stuff, a proper system that is pretty much like science, you know, very black and white, very repeatable, right? It is extremely predictable, right? And when you increase risk, what I started to realize, because I started to increase risk, all of a sudden I'm like, yes, 1% is a fucking trap. And I started digging, I started looking, I'm like, how are these people scaling massively? I'm not talking retail traders, I'm talking portfolio managers of fucking hedge funds who manage millions, tens of millions, hundreds of millions of capital. You realize that at multi-billion-dollar hedge funds, you're gonna have portfolio managers managing 500 fucking million. All right? Trading with 500 million. Now, a lot of plans don't scale that high. They will break extremely early, very early, won't even scale to 1 million, right? But there are ways to scale to hundreds of millions as a single trader. They're out there. Most people just don't look. Most people don't dig because they focus on surface level opinions, surface level advice. So what am I talking here? Well, let's go back to this, right? Let's break down the 3 trader profiles, right? And then I'm going to kind of come back to this chart, right? I'm going to have it open as I talk. I'm going to give you a little lesson, right? So I have 3 trader profiles. Just going to read it. I'm going to demonstrate it on the chart. So each profile uses the same framework with a slight variation in stop placement and style, right? So plan 1 has a 0.9R trade expectancy. Clean, simple, consistent, great execution flow. But when paired with 1% risk, it becomes difficult to scale aggressively. You need hundreds of trades for meaningful growth, which is 100% true. You know, 100% true. Hundreds of trades. And when we're talking about hundreds of trades, a lot of people want to make a lot of money in a year or 2 years or 3 years. They're going to try to take all that trades in a very short amount of time, which is going to lead to a lot of emotions, a lot of overtrading, and a lot of errors. You know, it's very flawed. It's extremely flawed, right? Plan 2, 1.95R trade expectancy. This is like one of my personal favorite plans. Balanced reward, easier to execute. When combined with 5% risk using an 80-20% capital split, it becomes the most powerful setup for compounding a lifestyle freedom. I'm going to explain how to manage risk in a sec. In plan 3, 4R trade expectancy, high reward, fewer trades, requires more precision, but incredible upside for traders who love the high reward game. Key takeaway, it's not about finding the perfect strategy. It's about aligning expectancy, risk, and frequency with your personal goals. Okay, most traders run a 0.9 R system with 1% risk and expect to scale, and the math just doesn't support that. So let me explain this system, all right? Well, let me just explain a system that you can adapt to your own trading. I'm going to show some trades, current market conditions in a second. But for now, I just want to talk system, all right? So all I ever look for is a breakdown wave, okay, or a breakout. But just imagine that this is price action. Imagine that this is, hey, this right here, you know, a breakdown wave, or this right there, a breakdown wave, right? Put this right here, a breakdown wave, or a breakout. It could go in the opposite direction too. It could be bullish, like your dollar, you know, a breakout wave. Okay, so you know what I'm saying. So all I ever do is look for that one thing, which is that breakdown wave. Okay. And as I have that breakdown wave that happens for multiple different reasons, it could be a news event, it could be an earnings release, it could be, you know, CPI or NFP or GDP or Elon Musk, you know, posting on X or Trump tariffs. It could be anything. It could be anything that causes either a big long-term breakdown on a daily time frame or a short-term breakdown on a 1-hour time frame if it's just a small news catalyst. So what I'm saying is I'm mainly looking for this kind of big wave that's either to the downside or to the upside, but this big kind of breakdown wave. Then as I identify that wave, I'm looking to either, potentially both, trade the pullback and trade the continuation, right? So I typically have about 2 trades here. You know, I'm not always going to get the pullback and I'm not always going to get the continuation. I might get one or the other, or I might get both, or I might get none. But when it comes to scanning, this is what I look for. So let's explain the system. When I was talking about the 3 trader profiles, system 1, plan 1, we're looking to execute plan 1 with roughly a stop distance that looks like that based on Fibonacci retracement, and looking to target something like that. So let me explain this a little bit more detail. Okay, when we identify a breakdown, price typically needs to pull back. And when price action pulls back to what I call the value area, what is the value area? The value area is when it retraces to value. In my opinion, it's when it retraces to one of the Fibonacci's. Fibonacci retracements, 0.382, 0.5, 0.618 Fibonacci retracement. That just means it's value. It just means it pulled back enough. You can look at other indicators, but this is just the measuring tool that I use for a lot of my trading. For position sizing and identifying value. So as soon as it pulls back to about 0.382 Fibonacci retracement, it means it's in my value area. And then I'm looking to, once it reverses and breaks down, I'm looking to capture this and write it for profit down to about 0.618 Fib extension, something like this. And I give roughly a position size like that, okay? Now, sometimes there's an opportunity to play this pullback, right? And I position size it the same way, right? With plan 1. We're talking about plan 1 here. So we can sometimes play this pullback for a nice 1R back to the top, right? So the pullback is typically little bit less profit, simply because with the run, we can trade the follow through as well. But with the pullback, we gotta expect that, hey, at some point this might die, and probably will die and then reverse, right? Now, when I'm talking about trade expectancy, so this number here, 0.9, 1.95, 4.05, that is based on, if you want to calculate your own trade expectancy, it's take all your profit divided by number of trades, right? And that profit could be in percentage, it could be in dollar, it could be in R multiple. I use R multiple a lot because of different risk, different percentage risk, 1%, 2%, 3%, 4%, 5%. So I'm not going to say 10% on a trade, I'm just going to say 2R, R multiple, 2R. So yeah, you can find out your own trade expectancy by, again, just taking a total profit, either in R multiple, percentage, or dollar, and dividing it by the total number of trades. And that gives you the average amount that you make per trade, right? Trade expectancy, what you should expect per trade if you continue with that performance, if you continue with that plan, right? Now, most people have a flawed plan, right? And they're trading a plan that they don't like the KPIs, key performance indicators. They don't like the strike rate, they don't like the return, they don't like the average loss, they don't like the average win, right? So what do you want? So what I'm talking about that is I'm trading a very high probability style. So personally, I'm looking for my strike rate to be anywhere around 60% to 80%. After 100 trades, I would love it to average out about 70%. That means I will have lower strike rate months, at 60%, 50%. But if it falls below 60%, my strike rate or my win rate, if my win rate falls below 60%, it's an error, it's an alert. I'm like, what's going on? What the fuck is going on? Am I misreading the market? Am I making errors? Am I over trading? Am I messing some things up? It just becomes an alert. I go dig, you know? But I want to maintain a good strike rate. I want to average out at 70. And I do that through good ideas, good execution, right? Good management. There's ways to maintain a good strike rate. When people say, hey, you can't have a strike rate over 50, it's fucking false. Okay? They don't have a strike rate over 50. Their system can't produce it. But there's many systems that can. It just means precision, less is more. Okay? Sniper versus machine gunner. Think about it. A machine gunner who's taking shit ton of fucking trades or shooting fucking everywhere, is not gonna have the same precision, the same strike rate as a sniper whose framework is less is more, right? So let me explain this a little bit more, right? So I explained how do you get your own trade expectancy, and let me explain how you can build a plan and optimize for a specific trade expectancy. So I'm optimizing for a 70% strike rate. I know that I'm going to have maybe 16% months, 50% months, maybe 40, and I'm going to have some 80s as well in there and somewhere in between. I want to average out at about 70% strike rate. I want my average loss to be about 0.5 R. I'm going to have some minus ones, I'm going to have some zeros, and I want my average loss to be about 0.5 R. Okay, my average loss should not be 1 R. I should not be taking a full loss every single fucking time I have a loss. You know what I'm saying? Right? So when I have losses, I should have some minus ones and I should expect the extremes. I should have some break evens, right? And I should expect that too. And I should expect a bunch of losses in between, some 0.2, some 0.3, some 0.5, some 0.6, some 0.7. And after, 100 trades, if we have a 70% strike rate, 30 losses, I should expect average loss of about 0.5 R. Okay. And same thing for win. Okay. So when it comes to the win and locking in profit, specifically on this run, right? The minimum win should be about 1 R, okay, in this area. The maximum win should be about 2 R. And we should have a bunch of wins in between here for about 1.5, 1.2, 1.3 R, okay? So our average win should be about 1.5. Now with this type of position sizing, a 70% average strike rate, a 0.5 average loss, and a 1.5 R average win, okay? You get a 0.9 R trade expectancy, okay? And at 1% risk, it takes 257 trades to 10x, these types of trades. And at 5% risk, it takes 52 trades to 10x. Plan 2, 1.95 trade expectancy. The only thing that changes, stop loss placement, and you refine execution. You double reward. Nothing else changes. You refine execution. Now the pullback becomes a 2R, and the run becomes a potential 4R. Strike rate should become the same, should still stay the same because you just refine execution a little bit more, Average loss should still stay the same. You should have some minus ones, some zeros, and a bunch of stuff in between. Average win, however, changes massively because Now, minimum profit is 2R, maximum profit is 4R, and you're going to have a bunch of stuff in between. Average reward should be about 3R. Okay. Now, with a 70% average strike rate, 0.5 average loss, and a 3R average win, you're getting a 1.95 trade expectancy. And lastly, plan 3 is a little bit more aggressive. You'll be stop clipping, okay, the price action when you're entering, and you're typically getting 8R. Okay, what does that mean? It means 4R to initial target, 8R to the main target, and a bunch of exit in between. Strike rate should still stay the same because you're refining execution a little bit. You know, maybe it will fall a tiny bit. Average loss should still be the same. You're going to have some -1s, you're going to have some zeros, you're going to have some stuff in between, you know, but average win changes. Same target and everything, you know, but just because of the tighter positioning, you make on average 6R, 4R, 8R, and a bunch of stuff in between for 6R. And we trade the pullback in the same way. It's just the pullback is going to be 4R. You know, we don't have the follow through on the pullback. You know, it's just a pullback and then the run gets the follow through. So when I say that's all I ever look for, I only look for that. And I trade, personally, I like plan 2. You know, so I'm looking up, I'm optimizing for 2-to-1 to the lows and 4-to-1 to the main follow through. Okay, so we got that covered with, right? And I hope it didn't confuse you, right? Because it's pretty straightforward, right? But those are the plans, right? So let's continue. It's not about finding the perfect strategy, right? It's about aligning expectancy, risk, and frequency with your personal goals. Most traders run a 0.9R system with 1% risk and expect to scale, but the math just doesn't line up. It's a lot of work, you know? So scaling doesn't mean taking more trades. It means trading better, managing portfolio risk, and moving through stages of intention. That point, moving through stages of intention. This is how the 10x happens in clean phases, not chaos. A lot of people are going to look at this and be like, fuck, you know, this guy's just going to scale to $1 billion. No, the system will fucking break. Okay, the system will break. You will break. Your psychology will break. Your self-worth will break. You know, you're not worth $1 billion. Personally, you know, system breaks. So you got to scale in intentions. You got to do these 10x sprints, you know, and then capital partition properly. You're managing risk on a portfolio level. So if you're like, I got 100K, you know, but you're expecting me to put 5% risk on 100K, 5K, yeah, you could. Or you could start with 1%, make some money, increase to 2%, make some more money, increase to 3%, make some more money, increase to 4%, make some more money, and then be at 5. You know, but you're already profitable. Now you can scale at 5. You're already profitable. Bank that, put it as cash, you know? Or do the opposite, right? Do the 80-20 split, portfolio management. So you got 100 grand, right? Do the 80-20 split. Invest 80 or put it as cash, trade 20 at 5% risk. That's 1% risk of total portfolio. 10x that 20, you make 200K. You have that cash. Now you have 200K. Scale that 200K up to $1 million. You know, then pull it out. You get $1 million. You get some cash sitting aside. Then it's a different game. Your game from 1 million to 10 million might be a little bit different. You know, you might be playing the 2x game where I want to just double, make $1 million, pull it out. You know, put some as cash, put some into long-term holdings, spend some, put some into investments, make another $1 million, pull it out, make another $1 million, pull it out. Or it could be 100K, make 100K, pull it out, make 100K, pull it out, make 100K, pull it out. That's playing the 2x game. All right. So we have two goals. It's either 2x or it's either 10x. Some of you guys need to do that quantum jump. You're at 100K, you need to get yourself to $1 million. That's a 10x. You got to do a 10x push, you know? And then when you're at $1 million, you'd be like, okay, I'm going to chill out a little bit. I'm just going to focus on doubling that and making $1 million this year, pulling that out, resetting my account to $1 million and keeping that other $1 million cash and slowly growing like that to 10 million as an example. You know, there are ways to do this. There's ways to manage risk properly, all right, and make a shit ton of money. It's just what I'm saying is most people don't do the digging. Most people just stay stuck at 1% and over trading. You know, it's not about that at all. You know, there's ways to 10x in phases with intention, you know, and then reevaluate. And most systems won't scale to 100 million plus. Most day trading systems won't, you know, not enough liquidity. Some will, a lot won't. So brings me to the lifestyle shift that changes everything. Because at the end of the day, you know, you don't want to be sitting here hustling 10 hours a day. You know, maybe you do, but I mean, most people don't, right? So at Enigma, we only trade about 10-hour weeks, not 10-hour days. We do 10-hour weeks and outperform. You know, it's about leverage performance. 25 trades a year, not 250. You know what I'm saying? 25 trades a year, not 250. That's a big difference. So we're coming into the year, we're like, we're going to take 25 trades this quarter or 25 trades this year, you know? And some people are coming in, we're going to take 200. Who do you think is going to be better? You know? And people think 200, more experience. No, that's more room for error. It's more work. It's a lot of overtrading. It's a shit ton of work. And you got to refine like a motherfucker, you know? A lot of optimization. 25 is precision. You got patience. You're precise, and you can put on risk on really good ideas. You know, it's a nice lifestyle. So how does the system work? Right? I'm going to screen share a little bit. Right? So I'm going to go over recent macro money flow due to the Trump tariffs. Trump tariffs created a capital shift out of the US dollar and out of the US equities. VTI, tech, finance, consumers, the dollar, including Bitcoin, all took a hit, caused a clear wave one breakdown. You know, so I'm gonna kind of talk about that. Let's go to screen share here, and I'm gonna show a few examples. Few examples. First, I'm gonna show you how we prepare, because there's a proper system to this, right? And when I'm talking about systems, what I'm talking about is that each trading system, doesn't matter if it's my own or your own, each trading system needs to have specific things. You need to have idea generation, right? First, you need to be aligned. Personally, you need to be aligned in peak performance. So routines, mainly routines on your daily habits and your weekly habits need to be aligned so that you can execute that system flawlessly. A lot of people fail to execute the system flawlessly, whether it's their own or somebody else's. You know, they have a lot of errors. They were sleeping when they should be taking a trade or whatever it is, you know, or they should have exited that trade and didn't. They should have taken that one trade but didn't because they hesitated. You know what I'm saying? There's a lot of errors. So peak performance, one of the first parts of the system. Idea generation is being able to generate a lot of good ideas. Execution system. Once you have those ideas, you got to be able to execute those ideas well with precision and clarity. You know, risk removal system. Once you're in that trade, you got to be able to remove risk and minimize your loss so that you're not taking -1s all the time. And profit management system. Once that trade is running, you got to be able to lock in that profit, because a lot of traders have running profit that just disappears into nothing. So there's a proper system here. You know, it's not just, hey, find a breakdown and try to trade the pullback and try to trade the run. You know, you got to find good ideas. You got to find a lot of ideas. You got to filter them into the best. You got to make sure your analysis is solid, the best, you know. You got to execute those ideas well. You got to manage risk properly. You got to manage that profit, you know, and you got to do it all in peak performance without errors, without stupid human errors, because a lot of times people will, again, have running profit that just disappears into nothing, right? So how does that look like in theory? Well, this month as an example, you know, I had a lot of stuff on watch list. I had a good watch list, but in theory, I only had one idea. But I had a lot of ideas. But in theory, I only had one. And what is that? Well, it's the movement out of DXY, or mainly out of the US equities, you know, so let's say VTI. It was the movement out of VTI as US equities started to fall because of tariffs. As US equities started to fall, this money out of US equities has flown into Europe, right? But it caused me a wave one breakdown. Europe gave me a wave one breakout, right? But I traded US equities and FX. So US equities give me a breakdown. And at the same time, as money's flowing out of the US market, US equities are quoted in USD, they're flowing into Europe. Well, euro dollar, as an example, gave a breakout at that same time, right? Same pound dollar gave a breakout at that time, right? So I have here a bunch of stuff, bunch of ideas. I have some innovation plays. I know a lot of people like ARK. Well, ARK had a breakdown, and there's a potential short, there was a potential long, right? I have a lot of ideas. VTI, total stock market, had a breakdown, just had a pullback, that includes S&P and triple Qs, right? And out of those sectors, out of the S&P, we had a few key sectors, such as the financial sector, had a breakdown, the consumer sector, and the technology sector had a nice breakdown. So coming into this month, I'm like, I'm going to trade the pullback and I'm going to trade the continuation. And out of those sectors, I have the financial stocks, Wells Fargo. I took a trade on Wells Fargo, which was the pullback trade. I took a recent trade on Bank of America, which I'm going to talk about now, and I have other ideas lined up in the finance sector. Same thing in technology sector. Same thing in consumer sector. Same thing in a few other sectors. Here is industrial services, engineering and construction. Wave one breakdown, how to pull back. Nice pullback trade and potential continuation. I'm not going to trade at all. It's the same fucking idea. That's what I'm saying. It's the same money flow, so I'm just looking for the best, but I have shit ton of options, all right? And I have the pounds. I traded a pound Kiwi on a pullback because the pounds also broke out, and now they're pulling back. So they're going to be on a watch for some continuations potentially. If they pull back enough, they're already breaking out. I had euros on watch. I had yens on watch. I had a few dollars, but it's mainly euro dollar and pound dollar crosses. And I traded euro dollar on the pullback. Right? So what just happened here? Well, as an example, this month I was extremely prepared. I've identified the key money flow. I'm like, money's flowing out of the US, it's flowing into Europe. US equities are falling. Which sectors out of the US equities are being impacted the most? Finance, technology, consumers. Which stocks out of those sectors have the best setups? And now I have a proper list. Okay. Then as money's flowing out of the US economy, it's flowing into Europe. So there's a dollar exchange going on. US stocks are quoted in USD, European stocks are quoted pound, euro, whatever currency, right? And therefore there's a currency exchange. So the dollar's taking a hit and the euro's popping. Dollar's taking a hit and the pound's popping. Same idea, right? Same money flow. Now I have a list of pound pairs, euro pairs, and some dollar pairs and some yen pairs. You know what I mean? All based on the same narrative, right? Now I have a lot of options. Oh my goodness. All right? I'm extremely prepared. And not just prepared, organized. Red, still developing. Yellow means it's in value. Green is my favorite. Purple, live trade. So extremely organized. And I know exactly what the hell's going on, right? So bringing you to trade one. Let's talk about this trade, euro dollar, right? A lot of us took it. Simple setup. I'm not going to break it down. We had a wave one breakout, right? Massive breakout. It started to hit resistance. There's a nice trade here. Election day trade. I took that too. I'll show you in a sec. So it hit resistance, started to die down, and I trade plan two. So the simple setup, nicely position sized, main target before it even hits full retracement. Fell beautifully. Not much here really to talk about. Entry on the breakdown was a little bit early, popped a little bit higher after my entry, eventually started to reverse as it broke down a little bit farther here. As it broke down farther, I removed pretty much, I removed all risk actually. As it broke down right there, removed all risk, clipping that low. Then as it starts to trend, I'm just kind of doing fail safe. If it breaks this trend to the upside, I'm out, target hit. Okay, that was a 2R trade on that pullback. And that was just one. I could have traded many others. Okay, I could have traded the same pullback that was happening in finance, and I did. I traded that same pullback with Wells Fargo trade earlier in the month. You know, I could have traded that same pullback in SPY or VTI or any other part of the equity market. You know, it is just euro dollar had the cleanest level, and I was prepared, and it was part of my euro dollar bias, right? So that's that one trade. And as this trade closed, well, like I said, finance pulled back to value, and I ended up jumping into the next trade, which I don't know how this is going to play out, but it's the same thing, you know, which is Bank of America short, right? And good position sizing, right? Now let me explain the differences between the system. I'm going to show you a different trade here. Actually, no, let me explain the system. Let me explain the trade. So price action pulled back to value, hit a major level, decelerated in that area, gave me the first kind of trend breakdown. I'm entering on the trend break at value. So as I enter on the trend break in value, I'll plan 2 position sizing, 4-1 down to fib extension. This is really solid. This position fits really well. So what is my next action on this? Right now, I'm still at full risk. What's my next action? Well, let's dive into it. So if price action drops a little bit farther here, right there, if price action drops a little bit farther, I'm going to take my stop and I'm going to remove all risk right there. And if price action runs into my profit area, my target zone, second half of profit, I'm going to be exiting. If this reverses anywhere here, I'm out for 2R. It could be farther, and I'm out, you know, for 2.5R, or it could be farther. And if it starts to reverse here, and I'm out for, you know, 3R, or it could be farther. If it starts to reverse here, I might be out for, you know, 3.5R. And hopefully it doesn't reverse and my profit target just gets hit for 4R. Okay, but I'm not going to take anything less than 2 unless it's kind of like a break even or partial loss. So this is how I maintain, let's explain. This is how, in short, I maintain a high strike rate. How do I maintain a high strike rate? Well, did you see my filter? See my list? Okay, I looked through almost the entire market and narrowed it down to a few really good high quality setups. Executed with precision, you know, not some emotional, not shady stop loss, not a loose entry, execute with precision, right? Same pattern that I trade over and over again, right? So you get to maintain a really solid strike rate because, hey, you master it, right? Risk removal happens every single time. As price actions break down, I remove risk. And as price action hits my profit target, my profit area, my target area, and it reverses, I'm out, right? Simple system. So let's go back to this. So I showed you that euro dollar trade. I showed you that Bank of America trade, right? That's still playing out. I don't know how this is going to close, right? But you know, my next action is that if it breaks down a little bit lower, hopefully I can remove risk, you know. It's the same action every single time, right? Every single time. Now, to finalize here, right? This is something that the main highlight, you know, this is how kind of like the system works, from like a macro idea to filtered opportunity to risk managed execution, right? So you got the big idea, you know, filtered opportunities, and then execute it well with managing risk, right? And the system should work when you're only looking at this type of system, which you're looking for a breakout. It works across FX, stocks, crypto, commodities. It works across all levels, monthly, weekly, daily, swing trading, day trading, you know, and it's extremely efficient, right? So I hope this all makes sense. And I hope the math on scaling makes sense. And I hope my thesis on why most traders burn out before they fucking scale makes sense, because most people are trading, hey, that 1% game, which requires a lot of work, you know? So I hope that helps you out. And I want to talk real quick for Enigma. my private trading club right now, all my education I'm slowly releasing for free. I don't sell any beginner level education, hence why you have an advanced lesson here on how to scale as a pro trader. As a overview, the system obviously goes much deeper. In Enigma is my private trading club, a private hedge fund style trading floor for elite traders. It's capped at 25 members. It's built around one mission, helping you scale smarter with structure, systems, research, and a team. And we focus on precision, accountability, performance at the highest level. There's only 14 seats left. Now, how it works, if you're interested, this is, again, I hope that my goal is with this, that, hey, you take value within this, you apply it to your own system, you go make shit ton of money. All right. But if you like the way I trade, if you're managing a 6-figure portfolio and you want to be part of a team, work with us closely to refine your system, right, and scale with precision, with clarity, with a proper hedge fund style team who are trading 6 figures, 7 figures, 8 figures full time, link below. I got a few spots left, and I hope to work with you. Enjoy. Bye-bye.